IndiQube is also in focus. We've got the co-founder and CEO Rishi Das joining us now to break down those numbers as well. Very good morning, very good afternoon. Thank you for joining us. Tell us, you reported. Okay, that's right. You reported quite strong numbers in the first quarter with revenue uptick also of 37%. Can you tell us more about what were the growth drivers behind this and what is your outlook for the rest of the year FY27? How's that expected to play out?
So our growth drivers remain one, of course, the macro, the global capability centers are increasingly taking up more and more office space. I think that is one big driver for us. About 52% of our revenue today is coming from global capability centers. Also, our value-added services, which was about 11% a year back, now contributes about 17% of our revenue. And we have seen more than doubling of the value-added services revenue for us. So yeah, it's a combination of, I will say that more uptake of office space as well as a combination of value-added services, which has helped us achieve quite a good result here.
Okay, understood. And hi, I also want to understand your outlook in terms of the seat addition that you're looking at this year. Recently, you did say that you are looking at adding 30 to 44,000 seats annually. Are you on track for that for FY27?
Yes, very much on track for that. If you look at today, we have a total portfolio of about 10.6 million, 66 million, and our leased area is 6.7 million odd. So that leaves us with a good, healthy 3 million square feet or almost touching 3.8 million square feet of office space, which is available with us. So we are very confident that we should be able to, in this year, achieve a 30% plus revenue growth on an overall year basis. And even for 28 and 29, we are very hopeful of maintaining a very similar kind of growth trajectory.
Wow, Mr. Das, 30% revenue growth for the rest of the year. Well, I want to ask, because your occupancy is currently at 90%, it's improved in fact. Where do you see occupancy trends going for the rest of the year, and will that have a play in this guidance that you've just given us?
So basically, we track two kinds of occupancy. One is a steady state occupancy in our centers, which is typically centers which are more than 12 months old. And historically, what we have seen is between 85 and 90% is where this occupancy ranges. And we are very happy that we have achieved around 90%. And the overall occupancy typically is between 80 and 85%. So we are at about 86% over there. So I think we don't see that there is too much of headroom in terms of our occupancies increasing further, because that starts inhibiting growth. So the occupancies will remain pretty much where they are for the rest of the year.
Okay. And Mr. Das, you did say that you're looking to grow your top line by 30%. This is on the upper end of the guidance of 25 to 30% that you had shared with us earlier. You're also looking at EBITDA growth at 18% to 21% for FY27. Is 21% looking good? Are you looking at hiking that upper end too?
So our EBITDA, Aisha, will be more range bound, I must say, between 19 and 21%. As you can see that we ended the quarter with about 20%. So, and our EBITDA margins will fluctuate by a percentage point here, there. But because we are growing fast, so we don't see that any very significant margin expansion happening. We'll be range bound, focuses on growth and maintaining the healthy EBITDA margin. So it will be between 19 and 21%. That's what broadly we see we should be.
Got that. That's on the EBITDA margin. But tell us about the value-added services segment of yours. You've guided for about 17 to 18% contribution for the rest of the year. How are the margins in that segment? And I want to get more of a medium-term outlook to what sort of contributions are you targeting?
So, as I said, a year back, it was 11%. It has now about 17%. We see definitely this percentage improving. So what is 17 may start touching 19 or 20%. And the good part is that our value-added services are decoupled from adding real estate because our customers are buying more services, whether it's in terms of our offerings like IndiQube or basically whether it's in terms of consuming a lot of other services in their different centers. Margins in that business typically between our gross margins are about 10 to 15%. That's the broad margin typically what we have seen historically in the VAS business.
Okay, understood. That's for your value-added services. Mr. Das, your rent to revenue, pardon me, revenue to rent ratio is at 2.2 times right now. How much further can this ratio improve as your occupancy rises, and what would the key operational levers be to achieve that? Any number that you're working with?
So I would like to emphasize that if you see 3 years back, this number was about 1.9, and we have been consistently improving. And one big factor has been our value-added services, our ability to get more value from the same customer. So, but we don't see that changing very significantly. Like this 2.2, definitely it will be on an upward trajectory. It may become 2.3, but we don't see that changing very significantly. It will again be range bound for us. Yeah.
Got that, Mr. Das. And also tell us about the GCC segment. What sort of growth are you targeting from this going forward?
So GCCs today constitute about 52% of our revenue is coming from GCCs, and from an area point of view, they constitute about 49% for us. So we see that this should be maintained, and it has not changed very significantly. So that way, our client portfolio is very diverse. About 25% to 28% of our business comes from startups, unicorns, kind of organizations. Another quarter comes from Indian conglomerates, basically the likes of TVS and all that. And another half comes from global capability centers. So that's the broad mix. And we are very hopeful that the mix will remain similar, because we should also remember that GCC is a 3-year-old phenomena. When the COVID was at its peak, it was the startup unicorns that were booming. They were adding space. So the good part has been that India is a very deep market, and one or two sectors or themes have been doing exceptionally well. So from our point of view, we have always believed to reduce the concentration, be as diverse as possible. And that's how we see the GCCs currently being the flavor of the season. But definitely with more IPOs happening, more startups going public and all, we are also seeing that there is a good traction in the startup, the unicorn segment as well.
Understood. Flavor of the seasons, as you've termed it, Mr. Das, GCC. That's the kind of trend that we're seeing. Really appreciate speaking with you today. Thank you so much for your time.
Yeah. Thank you, Aisha. Thank you.
Thank you.